my channel. This video is a part of NISM Mutual Funds tutorial. I have already uploaded chapter 1 to 5 related to this playlist. I request you to watch those videos so that you get a better understanding on this full module. You can get the link to those videos in the description box at the end of this video as well as on the I button. So do not forget to watch those videos. And for this one, we would be covering chapter number 6, that is fund distribution and channel management practices. And at the end of the video, you will get MCQs which will give you a practical scenario to the theoretical aspects. So, okay, let's start with the video. If you like it, do hit the like button and do not forget to subscribe to the channel. So this chapter is all about mutual fund distributor. It will start with role and importance of mutual fund distributor. Now you as an investor, you are a link to your portfolio through fund manager and mutual fund distributor in between. Now these two players are of key importance. What does a fund manager do? He used to manage your mutual fund portfolio in line with the scheme's investment objective. Now we have already learned a lot about that. When we invest in mutual fund, there are different type of mutual fund which cater to different investment objectives. There are equity fund, debt funds. So people, investor with different objective, different financial goals can choose any of the scheme which suit their financial need. Now, fund manager, they try to construct a portfolio, an investment portfolio in which many companies, shares of many companies are included, bonds are included, gold instrument, real estate. So depending on that scheme. So a whole portfolio is constructed by the fund manager to fulfill the financial objective of the investor. Now, what a fund manager also basically do is EIC, that is called Economy, Industry and Company Analysis. Now, this analysis becomes important before the allocation of fund. So, whatever as an investor fund you have invested, there are professional fund managers who are skilled and knowledgeable in this particular area. So, before making that where should the investment be done, what should be the portfolio, the weightage of asset allocation. They do a proper EIC analysis. They try to analyze the whole economy. Then they try to analyze the industry, how the industry is performing. So there are different sectors and industries. So one try to analyze which industry can be favorable in the coming time, as well as the company analysis, which companies are performing well and which should be included in one particular fund according to the fund's objective to be fulfilled. So fund manager basically performs the major role in managing your invested amount and constructing a portfolio. Now second major player in this whole scenario is distributor, mutual fund distributor. This whole chapter will be about mutual fund distributors. So what they do, they try to assess the need, limitation, resource and financial goals of the investor. Before our money, as in our investors' money, go to the fund manager and they try to make a decision. Before that, we are the first link between our investment portfolio is the distributor. So we kind of get connected through the mutual fund distributors who try to assess our need, who try to recommend us a financial product where should we invest in terms of mutual fund scheme. So, for example, when you as an investor, you are not having much idea about mutual fund, you don't know where you should make investment, and you have just gone to a distributor. A distributor could be any AMC, it could be any agent, it could also be through online channel partners, so anyone could be distributor. Now, whatever source you choose, once you are going to the mutual fund distributor, they will try to recommend you a mutual fund scheme that where should you invest as per your financial need, as per your risk taking ability, as per your expected return. They would try to assess everything and then try to recommend you that which mutual fund scheme would be suitable for you. Now, this is what distributors act as a link between the investors as well as the fund managers. So you can just see over here that mutual fund distributors, they are acting as a link between the investor and the fund manager. So before the invested amount is going to fund manager, there is mutual fund distributor who is trying to assess the need of the investor, and they try to recommend that which scheme one should invest in. Okay, so this is the whole about fund manager and the distributor, and this whole chapter, this whole video, we would be studying, we would be learning about mutual fund distributors. So now let's start with type of mutual fund distributor. You can basically categorize it in two parts, individual players and non-individual entities. So individual players, there are agents. We know that LIC, that is life insurance corporations, they are the key players in hiring agents. So they have this whole business scenario in which they try to hire maximum agents that which can act as a link between their financial products and people making investment in their financial product. So individual players are the agents. These are the individual persons who are working as a mutual fund distributor. Then there could be non-individual entities. There are banks involved. We see that nowadays every bank is offering mutual fund as third party product. Mutual fund is basically not a banking product. Banking product is just the deposits and the loans. So whatever we see that nowadays banks are also offering mutual fund, banks are acting as distributor. They are trying to become a link between the mutual fund companies and the investors, because investors are having more trust built up on the banks. They are having holding their account, their money with the bank. So they easily trust bank, and thus banks has become a prominent mutual fund distributor, non-individual entity, a key player in this market. So banks act as non-individual entities. They are also mutual fund distributor. Then there are non-banking financial companies, as I mentioned the example. Then there are stock brokers also. Today, share market stock exchanges are also offering different platforms catering to the mutual fund products to be provided to the investors. So in that case, when one is investing through stock exchanges, there are stockbrokers who act as mutual fund distributor. Okay, so we would learn more about this in detail. Here just you need to keep this in mind, that mutual fund distributor is divided as individual, non-individual. In individual there are agents. In non-individual there are banks, NBFCs and stockbrokers. These are the main players. Now let's come to modes of distribution. Okay, so when this mutual fund initially we talk about when it was started, it was all physically. As in different financial products also, there was not involvement of internet, there was not advancement of technology in our country. So at that period of time, mutual funds were distributed through the use of like printed paper, application forms that were printed on paper, and those application forms were provided to the investor. So investor used to fulfill that application form of mutual fund, and that was to be distributed to OPOs, which we call as official points of acceptance. Okay, so there were certain kiosk or acceptance points were made where the investors used to fill the application form for investing in mutual fund, and those application forms were physically submitted to those acceptance points. Okay, so this was the whole physical mode. Later on, with the advancement of technology, with the internet coming into the financial sector, there was a lot of development happened. So there came online channel partners who started facilitating internet-based transactions in case of mutual funds. Then stock exchange platforms also came into picture. Now these before stock exchange platforms were only for investment in shares, investment in derivatives, those companies that are listed in stock exchanges. So it was not for mutual fund. What happened later on, it was added like National Stock Exchange and Bombay Stock Exchange. They both extended their trading platform because mutual fund became such a prominent financial product. Major investors were getting reliant with the mutual fund. They were ready to make investment in mutual funds. Somewhat they were feeling that the share market and trading is a little riskier. but they later on started developing their trust in this whole mutual fund financial product, because it was involving so many options. There were debt schemes, there were hybrid schemes catering to different needs. So that's why even the stock exchanges like National Stock Exchange and Bombay Stock Exchange, they extended their trading platform and they started offering mutual fund products to the investor. Now, for this reason, they created different special platforms. For NEC, that platform that was created for mutual fund distribution and investment was NMF, second platform, which is National Mutual Fund, second platform. BSC's platform is BSC Star Mutual Fund platform. So these both platforms were created by BSC and NSC as extension to their trading platform to cater the need of investors to invest in mutual funds. And as I also mentioned, that stockbrokers used to recommend them like which mutual fund schemes they can invest in. So stockbrokers act as a distributors as well. Then there are MF utilities. Now, MF utilities facilitates the investor with a CAN, that is common account number. Now, you can just type this in the web address like MF utilities and you'll get a whole web page open, which you can see that it is MF utilities, what we say mutual fund utilities. Now, this whole internet-based web application was created to cater the need of investors and make it much easier to invest in mutual funds. What happens that there is a consolidation of different mutual fund companies. So for example, SBI Mutual Fund, SDFC Mutual Fund, UTI Mutual Fund, and various other mutual fund companies, various other mutual fund AMCs, all you can find on one single web-based platform that is called Mutual Fund Utilities. And there you just need to register yourself as an investor. You will get a CAN, that is common account number, and that is how you can start your transaction. You can start your investment journey in any of the mutual fund unit. So you can choose any of the mutual fund from mutual fund company through which you want to invest from there, and you can start your investment in mutual fund. You would be provided with this common account number on registration. So this mutual fund utilities again was a good initiative taken as to make internet-based mutual fund transactions much easier for the investors. Investors can find all the mutual fund companies over there. Most of them are over there, and you can just register yourself, get a CAN number, and then start transactions. Then there are various electronic platforms. Nowadays, we see computer-based and mobile-based apps are there. There are prominent players like ET Money, Grow app, which are providing you the option to invest in mutual funds. So there are third-party apps which are constructed, we can say, as electronic platforms to make the investors facilitate the need of mutual fund investment. So today there are a lot of modes of distribution. Not only the physical mode of official point of acceptance, from there to online channel partners, stock exchange platforms, MF utilities, electronic platforms. Everything has gone internet-based, computer-based, mobile-based. So there's so much options nowadays for the investors to invest in mutual funds. You just need to notice all those names and modes of distribution so that it just click to your mind if you get any question, any multiple choice question related to this. So just remember the names and the basic function of it. Now let's talk about prerequisite to become a distributor. Now, can anyone become a mutual fund distributor? Is there certain eligibility criteria required? So obviously there are certain steps that is required, which is mandated by SEBI and AMFI together. So these are the prerequisite if you want to become a mutual fund distributor, if you want to sell the mutual fund schemes. Okay, mutual fund distributor means you are a source of link between the investor. You are trying to sell the mutual fund schemes to the investors. You are trying to provide various information related to mutual fund schemes. So how you can become one? First step is obtaining NISM certification. Now this what we are learning whole NISM certification is with the sole purpose of becoming a mutual fund distributor. You know that once you clear this examination successfully, you can get yourself registered with AMFI. You will get ARN, that is AMFI registration number, which will make you eligible to work as mutual fund distributor. Then you can either work individually as an agent or you can work for any AMC. So this is what first step is that you need to have the NISM certification. Also, I must mention over here that the AMCs that provide mutual fund, that sell mutual fund products, it can be, as I gave the example of banks. Banks act as a distribution channel. So if the bank have to sell mutual fund products, one need to see that the employees working over there who are involved in this particular section of distribution of mutual fund, of selling of mutual fund schemes, they should obtain NISM certification. So for your job purpose also it has become so important these days. If you are going to work for any of these companies and your function would be to get involved in selling of mutual fund schemes, so you need to have the NISM certification. That's important and it is valid only for 3 years. So it is updated after 3 years and you again need to attempt the same exam. Okay, so now let's see over here. First step is obtaining NISM certification. We all know that any individual needs to pass the NISM certification examination mandated by SEBI. SEBI, that is Securities and Exchange Board of India, the regulatory authority of mutual funds. Second step is to know your distributor requirement. Now, AMFI has introduced the KYD process to verify the correctness of information provided in the registration documents and have to verify the ARN. Okay, so as I mentioned that once you clear your NISM certification, you can get yourself registered with AMFI, that is Association of Mutual Funds of India. AMFI will provide you a registration number which is called as AMFI registration number, and then there is this requirement of KYD, that is know your distributor. Now this is basically done to verify as a due diligence process to verify that the documents submitted by the distributors is totally correct. It has been verified. There would be biometric process, there would be document verification process. This is all a part of due diligence to see that the mutual fund distributor is true and fair to the information that has been provided by him. Third step will be obtaining AMFI registration number. Okay, so as I mentioned about the AMFI registration number, first this KYD is done. Okay, once you get this, once you clear this NISM certification, then you go through this whole process of KYD requirement where the verification of your document is done, where the biometric process is done. After that, you are provided with AMFI registration number. So just see, after obtaining the certification and completing the KYD requirement, the next step is to register with AMFI. And on registration, you would be allotted with AMFI registration number. So I was talking about this ARN, AMFI registration number, which you can obtain by clearing your NISM certification. And in between both the process, you have to comply with this KYD. Now KYD is checking the correctness of the information of the distributors. It could be biometric, it would involve biometric as well as document verification. Fourth step would be empanelment with AMCs. Now you can get empaneled with any of the AMC and you can start working. So the distributor can get empaneled with any number of AMCs. There is not any restriction that you can work for any one particular mutual fund company. It's not required. You can work for multiple mutual fund companies, and you can become agents of distributor also who are already empaneled. Now this empanelment is compulsory if you want to sell mutual fund schemes and earn the commission, because the commission will be paid by the AMCs or wherever you are working, wherever you have been empaneled with. Okay, so this is a stepwise process which you need to remember in your mind, that how you can become a mutual fund distributor. First of all, you will be obtaining your NISM certification, you will be clearing your exam. Second, there would be a KYD process in which the verification of your document will be done, biometric will be done. Once you qualify that, you would be provided with AMFI registration number. Now this AMFI registration number is provided by AMFI, that is Association of Mutual Fund of India, and later on you can get yourself empaneled with any of the AMC or mutual fund company, and you can start working as a mutual fund distributor professionally, and you can earn the commissions. Now next is revenue for mutual fund distributor. So just now we learned that mutual fund distributors, the main source of revenue is through commission. They earn as a source of revenue is commission. Their earning is commission. Okay. So what is the revenue model for mutual fund distributor? First is transaction based model and second is AUM based model. So this was previously used, both the models. Nowadays it is trial commission, which we will be learning later. So let's see that transaction based model was that at the time of the transaction. So once you as a mutual fund distributor, you are able to convince any investor to invest in mutual fund scheme, and as soon as that investor will be doing transaction in the mutual fund investment, you will be earning your commission because you as a distributor, you have bought that investor to invest in that particular mutual fund. So commission in this particular model, commission accrues or occurs at the time of transaction, and this generally happens with the stockbrokers. This is an example. So if you are working as stockbroker and investors are there who are trading through the stock exchange platforms of mutual fund, which we learned in previous slide. So at that time, when the investor will be doing their transaction, you will be earning your commission as a broker. So that was the transaction based model. Then there is AUM based model. AUM means asset under management. This is the total fund that is invested through mutual funds. Total, we can say the combined fund amount through mutual fund investment. So AUM based model is like commission will be payable to you on an ongoing basis as long as the investor remains invested. So this was a more profitable one. You can see that an investor, and that's why you must have seen that most of the mutual fund distributors, they used to say that to be invested for a longer period of time, because in that way both the investor as well as the mutual fund distributor both will be earning good, because even an investor who would be holding for a longer period of time will be able to see better returns. And even a mutual fund distributor, if the investor is holding for a longer period of time, he would be earning better commissions, because commission will be payable on an ongoing basis. So if the investor is invested for a longer period of time, it would be a continuous source of income for the mutual fund distributor. Okay, so this AUM based model generally applies to asset management companies, the distributors that were registered with the AMCs and the people working over there. Later on came the trial commission, which is now being followed by the AMCs, and it has been mandated by SEBI that this revenue model should be followed. So we talked about AUM based model and transaction based model. After that, this correction was made and trial commission came into picture, which was mandated by SEBI, and it need to be followed by all the AMCs that are selling mutual fund schemes. Now here what happens that the commission payable is calculated on daily balances as a percent of net assets attributable to the unit sold by the distributor. Okay, so we will see that how trial commission is calculated. It's an easy calculation. We will see that in next slide. But you just have to notice it that it will increase or decrease depending upon the NAV. So trial commission is generally linked to the total value. Okay, so what investors has invested in the amount multiplied with the NAV, that becomes the total net asset, and the commission will depend on that net asset only. Now what happens that just now we learned that net asset is calculated by NAV into the total invested amount. Now if the NAV increases, it will benefit the mutual fund distributor, because the trial commission will also increase with the increase in NAV, that is net asset value. Now if NAV decrease, there will be decrease in commission in the same way. So trial commission, it will increase or decrease depending upon the NAV. Now this is paid out periodically to the distributor, which is mostly quarterly basis. Okay, so let's see, and it will become easier for you. How is this calculated? So we saw about the revenue model of trial commission, in which a mutual fund distributor, they get paid as percentage of net asset. All right. So let's see. Now trial commission for 1 day. The formula to calculate it is AUM into trial commission rate per annum divided by 365. Now you just see that we are dividing this by 365 because we are calculating here the commission for each day that will be earned by the mutual fund distributor. And AUM is the total invested amount. So let's see that if the investment amount by one particular investor through a mutual fund distributor, there has been 10 investors, and total 10 investors, they have invested a total amount of 10 lakh rupees. So let's see, the total investment amount is 10 lakh rupees. Now we have just assumed that trial commission rate is 1% per annum, yani yearly. It means yearly. Okay. So trial commission rate is 1% per annum. The total invested amount is 10 lakh rupees. Now, if you need to calculate the trial commission for 1 year, it would be 1% of this investment amount. So as I said that it would be a percentage of net asset. Net asset over here is investment amount, total investment amount. So 1% of 10 lakh rupees. So that is somewhere equal to 10,000 rupees. Okay, and here we saw that the formula was for 1 day. Okay, so if we are calculating trial commission for 1 day, we will dividing it by 365 days, and we will get the value rupees 27.397. So you can just remember this formula because it may be asked in your MCQ on how to calculate. What you need to keep in mind that you should have this total investment amount. Okay, if this is it may be that NAV will be given and certain units will be given, so the investment amount will be equal to total units into the NAV. That would be investment amount. So total units into NAV, that would be investment amount. You can get this investment amount picture through that. So just remember that you must have this investment amount, which would be your AUM. You must have this trial commission rate. So it is over here an assumed trial commission rate of 1% per annum. And then you can just calculate. So 1% of 10 lakh rupees came to 10,000, and if we have to derive for each day, it would be 10,000 divided by 365, that is 27.397. So this is how trial commission was calculated. And one thing also which I mentioned, that it will increase or decrease with the NAV. So it is, as I said, it is paid periodically on quarterly basis mostly, and it is calculated on daily basis. So if the NAV has gone high, this investment amount will the commission amount will increase ultimately. Okay, so if NAV goes down, the trial commission amount, it will decrease. So you need that to keep in mind as well. Now let's see some additional commission and GST applicable. So till now we talk about the major source of revenue for the mutual fund distributor. Other than that, there is certain additional commission that the mutual fund distributors can also earn. Now this is like additional commission to distributors are paid for promoting mutual funds in small towns. So for small towns, it becomes more difficult to make people aware about investment in mutual fund schemes or any other financial product. In small town, people are more restricted to these investments because they are having lesser amount to invest, and thus they have this fear of losing their money. Now, this is the reason that why mutual funds is necessarily to be promoted in small towns, and those mutual fund distributors who are able to convert these mutual fund schemes, who are able to sell the mutual fund scheme in small towns, they are provided with additional commission. Now these small towns which we are referring over here, these are the cities and towns beyond the top 30 locations. So other than the top 30 metro cities or the higher locations, we can, whatever comes is the small towns we are considering over here. Okay, so additional commission is provided for promoting mutual fund in those areas. SEBI has allowed a transaction charge per subscription of 10,000 and above to be paid to distributors of the mutual fund products. Okay, so there is additional this transaction charge also paid if an investor is investing more than 10,000 amount. Then what is the transaction charge that can be paid, that can be an additional source of income to the mutual fund distributor? So let's see, if it is first time mutual fund investor who is investing more than 10,000 rupees, so there would be a transaction charge of rupees 150. Now this 150 would be a benefit for the mutual fund distributor. 150 would be deducted from the investor's amount. If the investor, if there is we talked about first time mutual fund investor, so 150 is deducted from the total invested amount of investor. And if the invested is other than first time mutual fund investor, so 100 rupees will be deducted from their invested amount. And both these transaction charges would be a benefit to the mutual fund distributor. So this is two additional source which we have learned over here, that they are paid additional commission for promoting in small towns. They are also paid transaction charge if there is investment amount of more than 10,000 by first time mutual fund investors and other than that. So 150 and 100 respectively. Now also there is a regulatory requirement that a mutual fund distributor should be registered and obtain a GST number. They also have to pay GST to the government. So this is just additional information that GST is applicable to mutual fund distributors commission as well. So their earning is also applicable to the GST. Now let's come to commission disclosure and due diligence for distributors mandated by SEBI. Now, SEBI has mandated mutual fund companies, or what we say asset management companies, to disclose commission of distributors and conduct proper due diligence process. Due diligence means the whole verification process of documents and biometrics of distributors in following criteria. So let's just see what are those criteria. If there is multiple point of presence, so if the presence of the distributor is at multiple points, it is for more than 20 locations, in that case there should be the disclosure of the commission that is being paid to the distributor. There should be a proper due diligence process to be conducted. Second point, if the asset under management total invested amount raised is over 100 crore, more than 100 crore, then in that case, including the non-institutional category, in the non-institutional category, but including HNIs, that is high net worth individuals. So this is such a large amount that if the AUM asset under management is total over 100 crore, in that case also there should be a proper disclosure of the commission that is being paid to the distributors and the due diligence process again to be conducted properly. Commission received of over 1 crore per annum across industry. Okay, so if in this mutual fund industry, the commission received is more than 1 crore per annum, if it is such a large amount, then the same thing will be applicable. The disclosures need to be done. Commission received of over 50 lakh from a single mutual fund or AMC. Okay, so this was across industry, which means for the whole mutual fund industry, which will include many AMCs. And this one is for one particular mutual fund company or asset management company. If the commission received is more than 50 lakhs, then the disclosures need to be made. And these disclosures of commission, disclosures and due diligence process to be conducted, it should be properly documented and submitted to AMFI as well as SEBI. So AMFI, that I mentioned, Association of Mutual Fund of India, and SEBI, the regulatory authority. So it should be submitted to them as well, the disclosures of the commission of distributors. Now let's come to some additional information. Now let's just see that nomination facility is also available to the agents or distributors of mutual funds. So in case of any demise of mutual fund distributor, they whatever the commissions they are liable to earn, that could be passed to the nominees they have selected. Okay, so nomination facilities is applicable over here as well, because we just see that commission is the major source of revenue for a mutual fund distributor, and they depend on this as any person depending on the salary. So in that case, if anything unfortunate happens to the mutual fund distributor, he can appoint nominee who would be liable for his income. Now, change of distributor. Investor can always choose to change their distributor, and this need to be done through a written request. It could be online through the websites, it could be offline through physical forms. So it could be done through a written request, and you can always change your distributor from regular to direct. And mostly we have been recommending in different mutual fund videos that you should opt for direct mutual fund. You should get some knowledge in this mutual fund schemes, and then you should opt for direct mutual fund so that you can take your own investment decision and you can save on that cost that you are paying to the distributor. So you can cut on that cost you are paying to the distributor and you can increase your profit percentage. So this facility is provided to the investors. Anytime they want, they can change their distributor, they can directly invest, and they won't be AMCs, asset management companies, mutual fund companies. They can't neglect you on this issue. They can't ask you for any you. They can't. They can't like say to provide you no objection certificate. You don't have to comply with any of these things. You can just through a written request, if you are going physically to the branches, to the main points, there you have to submit the application form of the modification. If you are going through the internet, through websites, you can do it easily. You can just switch from regular to direct mutual fund. So you can always change your distributor. If you want to change the distributor from one AMC to another AMC, you are also having that option. Okay, so this was all for this video. Now we would be attempting certain multiple choice questions to get a practical idea, to get a practical exposure to your NISM exam. So let's start with it. First is, only individuals are allowed to distribute mutual funds in India. State whether true or false. Option A true, option B false. Correct option is option B false. Second, mutual fund distributors certification examination offered by Dash is required for becoming a mutual fund distributor. Option A, Securities and Exchange Board of India. Option B, National Institute of Securities Market. Option C, Association of Mutual Funds of India. Option D, National Skills Development Corporation. So option A is SEBI, option B NISM, option C AMP, option D NSDC. And the correct option is option B NISM. In what form do mutual fund distributors earn revenue? Option A, commission from mutual funds for distribution of schemes. Option B, fees collected from the investors. Option C, commission received from AMP. Option D, investment advisory fee from mutual funds. And the correct option is option A, commission from mutual fund companies for distribution of schemes. Mutual fund distributors can only earn upfront commission from the mutual fund. State whether true or false. Option A true, option B false. So the correct option is option B false. 5. Mutual fund distributors earn no commission when the investor chooses to invest in direct plans. State whether true or false. Option A true, option B false. The correct option is option A true. Transaction charge allowed by SEBI per subscription of 10,000 and above to be paid to distributors of the mutual fund products is rupees 100, rupees 150, rupees 200 and rupees 250. So the correct option is option B 150. And let me just mention it, it is missing over here. It is for first time mutual fund investors. Okay, 150 was applicable for first time investors. Which among the following is not a mode of mutual fund distribution? Option A NISM, option B online channel partners, option C stockbrokers, option D mutual fund utilities. So the correct option is option A NISM. That is not a mode of mutual fund distribution. So thank you for watching. This was all for this video. Do not forget to subscribe to the channel. I will be uploading more videos of this particular NISM playlist. It is according to the new syllabus. So you would be able to clear your exam with full confidence and easily. So thank you so much. Do hit the like button and do not forget to subscribe to the channel. Thank you all.